Eric Muadit, Muadit.com. Let's take a look at the charts for the metals here, because I believe the more this picture continues looking the same, the more these markets are screaming that this is potentially where one needs to have some strong position on the downside. And I'll share with you my thoughts. In fact, it's the same thoughts that I've been sharing with you over the last couple of weeks, if not months. The first thing we can see here is now that the GDX is below the previous buy point. So in other words, this buy point and the breakout is failing. Remember, we had used the most recent previous weekly closing high at 30.54, which happens to be this weekly closing high right there. Let's call it late June. And the market did have a nice attempt to stay and break out. But right now you see that the market has moved the GDX back below 30.52. That being the case, this becomes now a red flag to consider much lower prices, especially if you consider the following. If you take a look at the monthly chart, and we are going to go to all monthly data for the GDX, what we see here is the level that we've been watching for potential break and for where the market is going to be most definitely flashing a major sell signal is developing right now. Keep in mind, we've been saying that if the market turns red for the month, it is red for the month, that this becomes a serious consideration for much lower prices for the GDX after showing a nice run off the lows of early 2016. So this move here has been huge in terms of percentage return off the lows here, but now the equation, in my opinion, is starting to change. In fact, if we go back and take a look at the main break of the highs here, let's call it in 2011, off the highs there, we draw a line from there, and this is where the market is now coming back to show whether it has the muscle to move above this level or whether it becomes resistance. Here we can see uniform activity rejection, which is for the highs there, and even for this week here. And also right now we are seeing we hit that once before for a 1 month pullback, and now the more this is going to be confirmed as uniform activity rejection, this becomes a problem for the GDX, suggesting that net, as long as this chart gives us uniform activity rejection here, now the equation has flipped, and more than likely we are looking at markets that gonna see a strong reversal. I would even say very strong reversal, given where the resistance is coming. Keep in mind, the reason why I say that is if you take a look at this red line. So the red line right now that we are drawing, and let me draw this again just for the sake of having it, this red line here so happens to be at about 61.8 on the monthly. Uniform activity rejection on this level, especially on long-term monthly charts, on the weeklies and the monthlies, tends to be a major sell signal area. So this is developing into something one can use to see whether they can take advantage of this current chart formation and maybe have some strong representation shorting the metals. Take a look at silver. If you come back and check this break, the break in 2011 off the highs, and during this monthly break, this is all data monthly, and so we draw a line from there, and as of right now, without any adjustment, you can see that it has come and hit that level, and for now it is showing reversal. In other words, it has hit that level and now is pointing down, suggesting yet again another instrument in the metal space, this time silver, giving a major sell signal, red flag. Now if you take a look, for example, at the steel ETF SLX, so now the steel sector, you can see the most recent break right here. That break brought the instrument off the highs of 2014. We draw a line from there, and you see right now we've come and we hit that level. So the more this is confirmed as resistance, the more this becomes a problem right here. Now keep in mind, one way that the bulls in this metal space can change the complex and the nature of the next major direction is by moving above this red line of resistance. Otherwise, failure to move above this red line suggests that we should expect a strong reversals in the metal space. We can also see for the SLX, if you take the most recent highs and draw a line, right now we are coming back and testing this top side RSI resistance going back to 2011, and the more this is confirmed as resistance, the more this gives another red flag. Now keep in mind, if you already own stocks and ETFs in this sector, you probably need to start protecting those profits if this is what is actually gonna develop and play out in the coming months. If you take a look at the GLD proper, the GLD itself, right now we are also coming back and showing the same resistance, and this becomes more of a problem as markets drop and record lower levels for the month, because we are coming back again to test the same breakpoint that brought the market off the highs of 2012 during this period here. And so we draw a line from there. We've seen that the market has responded before here in late 2012 for these monthly highs. Of course, we haven't been back to those levels, and here again right now we are seeing, with the market down for the month, that this is already being confirmed as a level to watch for a major sell signal right here. And again, the only way this can change is if the GLD, after a nice run off the lows here, if the GLD can move above this red line. Now keep in mind that red line again for the GLD so happens to be at the same level, or let's call it the RSI level, of approximately 61.8. And because of the nature of the negative, or at least the nature of this rejection, because it is uniform activity rejection, in other words, we touch that line and now we seem to be stalling. Because of that uniform activity, we should give this more weight, again suggesting that if one takes a short position here, they probably are putting themselves in the best light, because it looks like, as long as this is being confirmed as resistance, that the next meaningful trade in the metals is lower and substantially lower. Now if we take a look at the gold index chart, so the gold index chart, again similar to the GLD, coming back here and just doing the same thing. We broke down here in 2012 for the highs there. We draw a line from here, which is something like that. You get uniform activity above the red line, back below it for the highs there. You got rejection for the highs here. Again, the red line happens to be at about 61.8 for this long-term gold chart going back to about 13 years of data. Now, if you stretch this and go take a look at gold, the gold index going back to let's call it 1997. So about 20 years of data, and take the lows from here in 97 and extend that line, you get an insight as to the long-term picture. When the markets were moving higher, so to say, or at least when gold was finding support on these levels, it would at least stabilize and move higher. Now once the equation changed, ever since the break, we can see that since the break here, since that break, bringing the market off the highs here, we are coming back after many years, and we seem to be testing that same level. Now if that same level continues to be confirmed as resistance, it suggests that now that the back test is failing, this back test here, because the red line is now becoming resistance after being support for many years, this might suggest yet again another reason why I am saying that we are seeing a major red flag developing in gold, suggesting to expect a major pullback after a nice run of recent lows. So one can position themselves accordingly, because this is looking like where one can see profits on the downside. Eric Muathe with muathe.com. As always, Good luck. Good luck. Peace. Good luck. Good luck. Peace and blessings. Bless, bless, bless. Bless, bless. Yeah. Woo! Yeah.